The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Good morning from TFNN. Welcome to the October 9th. Well, it's not the Larry Pesavento Larry Pesavento show. It's Stevie Perseverance Rhodes who's filling in for Larry this morning while he is dealing with laryngitis out there. It's absolutely great to be with you. Fun to always do this show. I loved doing the 9 o'clock show because the futures market gives us an opportunity to help you understand exactly what's going on. So we're going to go ahead and do that. I'll be with you for the hour out here. I'm absolutely grateful for your presence here. And the key is that I'm here to serve you. So feel free to pick up that phone, dial on in at any time at 877-927-6648. Internationally, 727-445-1044. Of course, inside the den, you can ping us anytime. Email steve@tfnn.com. Be happy to try to search all of those vehicles to assist you in whatever it is that you are trading out there. This is Fabulous Friday. Of course, it's Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow futures. They're trading up 24 points at 16,990. S&P futures up 2 at 2,850. Russell 2000's up about 3 points. The NASDAQ is basically flat. She's trading at 43.45. Gold's up $10.50, trading 1154.80. Silver's up 11 pennies at 15.88. Light sweet crude up 65 cents, trading just over the $50 mark out here. Over in Europe, let's go see what the DAX and what the FTSE are doing here this morning. They should be celebrating because it's Oktoberfest, is it not? It is Oktoberfest over in Germany at the DAX, 122 points to the upside. That's 1 2/10% this morning. That's trading at 10,115. The FTSE is up 1% as well, trading out at 64.41. That's up 66 points. Green arrows across the board. So if it's going to be a pity party, it's going to have to start with you and me, or it's going to have to start with the sellers. So let's start out. Now, today, what I want to do this morning is to tell you, or let the market tell you the story that it is telling, right? I am just simply like today, I'm doing the ventriloquist Larry Pesavento show. And it's really me who's here, but it's the words of the market that is the story that really each of us tell to you each day. Now, that story of the market, you've got to make sure that you stay inside the time frame of the story picture that we're looking at. So when I'm looking at a 30-minute chart, folks, you've got to stay inside that 30-minute chart. That 30-minute chart could give a hill of beans about what's going on in the daily time frame. The daily time frame could give a hill of beans, whatever that means out there, as to what's going on in the 30-minute chart. And then the same thing for the monthly or quarterly. So you want to make sure. Now, it's important, it'd be like when you're flying an airplane. You want to know what's up on above you and what's below you. You want to know where those storm clouds are at. So that's why we take a look at those multiple time frames out here. From time to time, you get synergy across the board. I don't know if we have that right now, but we're going to go take a look at it. So let's begin with, at least during this first 10-minute segment out here, let's go try to pick apart what's going on in the shorter term. And in the shorter term, what we're going to do is we're going to take a look at 30-minute, 120, 300-minute time frame charts out there for the futures contract. And then let's step back and take a look at, from a larger picture perspective, during some part of the other part of the show, we'll take a look at what's the long-term picture showing us out here. So let's dig in. Let's start off by taking a look at the NASDAQ. Now, actually, instead of going to the 30-minute chart first, let's take a look at this is the December contract for the NASDAQ. Now, one of the reasons we're going to start here is because really it's actually all about the NDX 100. It's going to maybe the Qs as well when we take a look at that chart. With regard to a signal today, and the NQ daily chart is really showing the same thing. If you're watching this on Tiger TV, and I hope that you are, don't forget you can always catch the archive of this show on channel, I don't know what channel this one is on. Used to be on, in any event, you can find the archive. Just click on Larry's name on the homepage at tfnn.com. But if you take a look at what we're looking at, folks, so we're looking at a price channel. In this case, it goes from upper left to lower right. And we're taking a look at our connection points, or really the body of the candles out here. And you try to find three bodies of candles. Larry's is on channel 9. Okay. And if we take a look at the and we use the body of the candle because the body of the candle is truly the essence of price. The wick out there is nothing more than a screaming Mimi. It's nothing more than the emotion that went on during that time period. In this case here, this is a daily chart that we're taking a look at. And not that you can't use those upper and lower wicks or those shadows, whatever it is that you like to refer to them as important pieces of information, but it's really the body of the candle that truly is giving you the essence of what's really going on out here. Now, what we can see is that the NASDAQ is right up against the top of that resistance line. And that's coming off of, now this is really important. It's really important to understand because this is coming off of its high right around the July 20th, 21st time frame out here, because the NASDAQ has the power. It has that ability. It's like a genie in the bottle. You can rub that genie in the bottle, and the NASDAQ can actually grant you those wishes. And what I mean by that is the NASDAQ can pull the market higher, or it can say, I don't really care what you want to do, Mr. or Mrs. Dow, S&P 500, Russell 2000. I'm going south, and I'm going to go ahead and take you along. Now, it's been a struggle over the last week out here because the New York Stock Exchange has just simply given the market, one of those brushes off of their chin, whatever that means. I don't think that's a good thing out there, but that's in essence what it's doing. So the NASDAQ up against resistance, and that's why you and I are going to go ahead and focus on that. And that was looking at the December contract. Now, let's go from a daily chart into a 30-minute chart out here. Let's go see if on a 30-minute time frame, if we can find anything that suggests, hey, top or bottom. Now, yesterday, and you and I, during the show that I do now at 1 to 2 o'clock in the afternoon, you and I looked at this pattern. Right at 1 o'clock, as we came on the air, we saw that price was moving. It's your favorite pattern. You know it's your favorite pattern out here. Price was moving lower with less relative weakness out there. Whenever a market does that, you have to pay attention. You don't have to. You don't have to do anything you want, but you should pay attention. And you should pay attention in this market of the slingshot of stretching the rubber band to help you identify where there is the potential of an important low or high. Remember, I said the body of the candle is the essence of price out here. And that's why you're paying attention to the body of the candle. And as we took a look at that candle that formed between 1 and 130, the essence of the body of that candle was bottom. Gave a nice little bear sash candle out there. To read it any other way is to ignore the signals of the market, and I will never do that for you. Now, the market can give you another signal the very next second, the very next minute. Well, we'll deal with that when that occurs. But what you and I have to deal with is, and we were yesterday, and did it call a bottom or not? Of course it did. And it was like, this was before the Fed release of the minutes out here. Does the market know something in advance? Sometimes people believe it's the participants of the market that know something in advance. Well, guess what? They can't hide from you and I. If we utilize just simply some sound techniques out here of understanding the essence of the candle, we understand what bullish and bearish reversal signals. And by the way, if you want to learn about those, I've got an extraordinary course that you can take and get in touch with the folks over at TFNN.com. And in a period of 3 to 6 hours, I will condense decades into those hours so that you just focus on only what it is that you absolutely need to know. If you are trading and investing without, and you're trying just technical analysis, any patterns out there, and you're leaving that piece off the table, you might as well just can the rest of the stuff that you've learned out here, because this is how the market squawks, walks, and talks. It's at swing points, and it's also with regard to these reversal signals. So now, off of that bottom yesterday, we're only in a second wave to the upside out here. And also, by the way, when price got above at 130, got above and made that little bull sash candle out there, there was also a nice little market profile that said, hey, you've got some pretty good support. It looks like around the 42.78 area or so forth. Now, you can see there is no price relative strength divergent pattern out here. That means that price inside of the NASDAQ, which on a daily basis we know is rubbing its head up against a resistance area. Hey, on the 30-minute chart, things don't look too shabby out here. In fact, if we take a look at that wave count that it's in, only in the second wave count out here. If we take a look at a parabolic SAR, that's in really a bullish formation out here. What the NASDAQ has to do in order to break above that descending channel line, and I don't know that it will, because I'm telling you, there is an impending top. I just don't know if it's right here, right now, but we'll find out soon enough. But at this stage of the game, if in fact the NQ can take out and close above 43.57.75 on the 30-minute chart, it will have broken out above resistance. Now, The other important element about this 30-minute chart here, right? We know that the daily is up against resistance. If you take a look at this 30-minute chart out here, you're going to see that the bottom of the box, dash line, the green line out here, and the point of control, where there's the most congestion, kind of like that pile up, or not a pile up, but that congestion zone in China. How'd you like to be on that kind of expressway out there if you saw those pictures out here? And if you take a look at that point of control, the light blue line right around the 43.34 mark, it is closer to support. That tells you if you were playing the game of Stratego out here, and that's what you and I are playing, it's the game of strategic trading and investing. This tells us that there is a whole line of support out here at that 43.27-ish type level. Now, just as we know resistance at the top, we know support at the bottom. And therefore, if in fact the NQ is able to close, we'll call it below the bottom of yesterday, of the low that came in at 4:30 this morning, that's at 43.2450. What the market will be communicating to you is that resistance is really something that is difficult for the NQ to penetrate. And what should you expect? You should expect at least a retracement of this last move out here. That's the minimum. It could mean more than that, but if we go take a look at what that retracement might mean or might be, here, let me just put the NQ up here. Let me go ahead and get to a 30-minute chart. It's just easier for you to see the retracement when I use the e-signal platform. And so if we just simply go from that low to the high out here, that was the low of yesterday during the show, you can see, well, the first place it's got to break below is 43.22. But that's in essence the area that we talked about. So if we see a close below that, we know we've got significant resistance overhead, and you should expect and anticipate, totally anticipate a move to 4,300. Now at 4,300, that's your normal 0.618 retracement level. You'd have to say that if it's able to churn its way back through that area, which had pretty decent volume on the 30-minute candle yesterday after the release of the Fed minutes out here, 42.84 is not out of the question, and 42.65. So we know the different levels that we can pay attention to. In fact, if we take a look at the NQ, let's do this. Let's go from a 30-minute chart to a 120-minute chart. Let's go take a look at it. Now, when we take a look at this chart, I haven't updated. You can see when it made this bottom back here, this is back at about 4 o'clock in the afternoon. Don't be hunk. September 29th out there. Same pattern we just looked at on the 30-minute basis, right? At the bottom yesterday. It's why you've got to pay attention to these patterns out here. And if we take a look at, and really, what the NQ did is it made a similar pattern out here at about 12 noon. This was on October the 7th. And when you close above an area that should be resistance, the top of that candle, by the way, 43.33.75. We're just trading above, we're trading above that now by a couple points out here. That's an important message. As far as wave counts are concerned, coming off of that bottom, let's get rid of the blue count out there. That doesn't mean anything. All you can say is, hey, you're in your fifth wave at this stage. This shows us also, just to put things in reference out here, on any retracement, 42.75 is the number on this. This is the 2-hour chart with regard to its market profiles, also set up in a bullish situation. But what I can tell you, and of course you'd say, oh, Steve, anybody can tell you this, there is an impending market top. The question is, how significant is it going to be? Steve Rhodes with TFNN. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days, and will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to Trade What You See, Larry Pesavento Show. This is Steve Rhodes filling in for Larry while he's out for the day, nursing his throat out there. And during the first segment, we were taking a look at the NASDAQ, key futures contract, equity futures contract for us to follow. But just as important is going to be the S&P futures. So let's take a look at it, and let's go take a look at it. And we're staying with the 30-minute charts here right now. So because the market communicates to you and I, we just have to be willing to accept their signals. And what the market has communicated to you and I is that while the NASDAQ is running up into resistance out here, the ES Mini has given us one of those shorter-term topping conditions. What say you? What say it? It's simple. If we take a look at coming back to the 4 o'clock in the morning time frame here, back on October 8th, this is yesterday, what we can see is coming off of that low, we've got a 7th wave count. That is the letter G that is on my system out here. And there is no better pattern because the market sings in the key of G. And when it sings in the key of G, you and I must pay attention. Because oftentimes that can be an area where you see the swiftest and largest moves in the opposite direction. It's a great way for you and I. It's another great tool for you and I to find a market that is extended. Now, when that shows up, and we have price moving higher with less relative strength, which is what it did. That's what that diagonal line on my screen here shows. I'll even update it. It'll go ahead and move it up to the very top of that candle out here. That says that's another confirming message. Now, How will you know if this is something of significance? Well, I would say on a 30-minute chart, we'll know when we see if, in fact, we see a close below 19.99 and 75 cents out here. So that is the key number to be watching. It doesn't mean that it can't ping it and that the intercession, right? You got to wait till the end of the bar is closed out here. So in this case, it's 4 minutes. It's not going to happen by 9:30, but between 9:30 and 10, you and I. So the market's going to pull back. So when we open up out here, the message of this market is we ought to see futures traders at least push the price of the ES mini down to the 19.99 area ish, 19.99 ish. Okay, so that's what we should anticipate. If we see a big move down and a close below that on a 30-minute basis, well, we just simply can go back to either trend lines. We can go back and take a look at retracements and things of that sort out here. So that's what the message of that 30-minute chart is. If we go take a look at the 2-hour chart here for the S&P futures, we're going to see that price has also been moving higher. We don't have a seventh wave count out here, which is always a thing that suggests to you and I that, hey, you know what, on the 30-minute basis, it may find support out at that 1999-ish area. And 1992.50 happens to be the top of the box on the 120-minute time frame. So you got to expect that not just 1999, but maybe even to ping down into that area. And if it finds support there and it moves higher, you know, that's the message the market is going to end the weekend, you know, on a big party note out here. But an impending top, of what significance, I don't know, but an impending top is due to arrive. The market is just simply extremely overbought. And I hate to use something as cliche as that. I mean, you know, is that really a tough call? Because, you know, the markets just simply move up and down out here. But in this case, you know, we do have price moving a bit higher, doing it with less relative weakness out there. And on a 2-hour chart that says, hey, you know, we've got to be paying attention to that. If I take a look at the 5-hour chart out here and we take a look at it, this thing recycled earlier in the morning, meaning it got above a seventh wave. That's always bullish out here. 5-hour chart says 1988 is a key level of support. I suppose the easy way to say that the market's going to have a deeper retracement, because that's what it is at this stage of the game, is any kind of type of close below the 1966 level. So that takes a look at the ES mini, takes a look at the NQ on various intraday time frame charts out here. I tell you what, before the market opens out here, we'll go take a look at that longer term picture during the last half hour of the show. But let's go check in on Goldilocks and see what she's doing. She's traded out at 1153.90. And this is really important. If we take a look at Goldilocks, what it did yesterday, the gold contract, you know, what it did 2 days ago, 3 days ago, on October the 6th, broke above that descending trend line out there. That was important. Let me turn the profiles off out here. No reason to add clutter when we don't need it. And as we take, no, let me turn off those there. Okay. So now as we take a look at the gold contract, we know what it did. Broke above a trend line, but shoot, it had done that back on September 24th. Came back though on the following day, October 7th, and yesterday, and this morning, came back and tested that trend line. Gold does not want to get back inside that trend. At least that's the message at 9:29 on October the 9th out here. And if it does not get back in that trend, the price projection of gold is 1222. But it must first close above this guy right here, the September 24th high. So the key number to be watching today is going to be 1156.40. You're at 1153.60. If it can't do that, Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to Trade What You See, Larry Pesavento Show. I'm your host, guest host, Steve Rhodes, filling in for Larry while he is out nursing a sore throat. Right now, we got the Dow is up 9 points, S&P is up a point, Composite is flat, the Russell is up 2 points. So the market is doing what you and I anticipated, right? We just simply went to the charts, we looked for the patterns and what we should expect this morning during the open here, during the first half hour or so, maybe longer, is the market to pull back. We know that there's significant levels of support, and it's really at those levels of support where either the bulls or the bears can get all giddy out here. At this stage of the game, there should be no giddiness. Now, as we go take a look at the rest of the markets, we looked at gold out there, so we know what it needs to do. You've got the miners, the NUGT is leading the charge this morning. That's up about $5, about 13%. But we know that the miners are going to move directionally along with the price of gold. That's why when we took a look at gold, it's so important. Well, for me, it's so important to pay attention to where the price of gold closes, where it, how it deals with these support and these resistance levels out here. Also moving upside this morning, Volkswagen, UTI Worldwide, Rio Tinto, Tech Resources, Deutsche Bank, American Airlines, Alibaba. To the downside, we've got Leader Holdings or LDR Holdings, Tesla, is off $6, Super Micro Computers down about 4, Wynn Resorts, boy, that thing has been on fire lately, Carnival Cruise Line. So nothing really of significance to the downside dollar-wise. Now, significance to the upside out here is the euro Japanese yen. And this is where the bears are going to really struggle this morning or during the day out here, because you see this currency pair is the absolute ultimate indicator of liquidity inside the U.S. stock market. When this currency pair is moving higher, and we've got a nice little wide-ranging bar candle as of 9:36 a.m., as this thing is moving higher, that's extraordinary headwind for any bears to try to push the market lower. It's not impossible, but what happens is it's the currencies that control the world. That's why you want to find a currency pair. It's not the U.S. dollar index, by the way. You want to find a currency pair that tracks the U.S. stock market better than any other currency pair, and that happens to be the euro Japanese yen. Now, the euro Japanese yen, in essence, hasn't really been doing a whole heck of a lot here lately, but today it has taken off topside. Now, it's got some resistance, and I would anticipate that it's going to go try for that resistance level in the 136.67 area. So if the market does retrace and this currency pair continues to move higher, it's the currency pair that's telling you to buy the dip out here. It's not anybody else. It's the currency pair. And if it can break above that little descending trend line out here, boy, that's an important message, because then that says that price inside this currency pair gets up into the 140 area out here. So that's what's going on with that currency pair. If we go take a look at, let's go take a look at Apple. Right now, not doing a whole lot, but, you know, from a weighting standpoint inside the NDX, that's important for us to look at. Apple just trading inside its own little box out here, and, you know, until it really cracks, even if it cracks below 108.80, which is the top of the August 24th high, it ought to find support around 105.31 out here. Hey, let's go out to Mexico, to La Paz, Mexico, to Charlie. Charlie, thanks for calling. Thanks for holding. How you doing today?
Good. How about yourself?
I'm doing well. So give us the weather forecast in La Paz. Now, La Paz is north of Cabo. Is if I'm correct? Is that correct?
Yeah, and it's slightly cloudy today.
Slightly cloudy. Now, how far away is Cabo from La Paz?
Oh, about 2 hours driving.
2-hour drive. Do you ever go down? Do you ever go down that far south?
Oh yeah, several times.
Oh, you ever stop in the Giggling Marlin?
Yes, I've been there. Have you been there?
Oh, good. Yeah. Next time you're in there, have a beer for me, would you?
Sure.
Now, you want to? I know that as and Larry says hi to you. He's inside the den, and so thanks for calling. And I know he calls you Priceline Charlie. So,
right.
And you want to take a look at Priceline. Tell us what you're doing and how I can assist you.
I've covered it when it set the bottom several months ago, and it retested and then came down, and I've been sitting a little bit, and I think it's reaching near the top, which was at 1,400 roughly. It's kind of pulling back, and I think this is the time. In the month of October, I feel there's maybe some downside or surprises or volatility, and I want to take a little gamble in this one. So it's either take it short here, and then where would you put the stop?
Well, so what I've got on my screen here is the chart for Priceline. And these are the things for you to consider that I would take a look at. The first thing is that you've got this high volume high out here from August 5th where it gapped up. You know, and if that was a true exhaustion top, price really wouldn't have necessarily come back into that area. Now, it was tested, or at least the low of that was tested. So ideally, if you're going to go ahead and take a short trade, you'd like, because we're so close to the bottom of that candle session, Charlie, which is 1325.10, ideally, you'd like to see price test that, 1325.10, close below it. It's likely going to do with less volume because the volume on that bar was 2.1 million shares. And then what I would do is I would set a stop above 1336.69 to be exact. Now, it would be a close above 1336.69. So from a from a sell stop standpoint, it's got to be somewhat above that. But if you got a close above 1336.69, what that would tell me, volume or not, is that Priceline is going to go test that high volume high from August 5th, and that price is $13.95. And you'd have to do the risk reward to determine whether that was worth it for you to stay in the trade that long. But on a daily basis, it's absolutely found resistance. Yesterday, it tested, the top of its market profile, so that's cool. That, by the way, is 1311.69. Volume behind yesterday's move was 432,000 shares. It's really the volume is really not that bad. I mean, it was it was a little bit lighter than the day before. But as I take a look at it, your best setup here is if this can spike and at least test the bottom of that August 5th area. Then let's assume that you take that trade wherever it is that you do. Then what you really need to see it do is to close below, from a daily standpoint, close below 1261 would tell you that you're onto something again. And then your next level of support probably is the 1191-ish area, and then finally 1132, where that could be, it for the move inside of Priceline. But that's the technical picture, utilizing some volume and the swing point and our TAS market profiles out there. How does that sound to you?
It sounds excellent. It was terrific analysis of where I should be. I really appreciate that. It was very good.
That's great. Glad to help. Now it is going to struggle because, the volume that it's dealing with there was a slight little gap down. The candle-wise, it doesn't look like much from September 18th, but it did have some pretty good volume of 1.2 million shares on the way down. And a lot of those folks that bought on that day probably were second-guessing themselves when price got down to 1185. May not seem like a lot, but they probably were saying, maybe I made a bad trading decision. So at this stage here, for it to just really trade sideways would be normal while some of those folks get that money back. All right?
Okay, I really appreciate the analysis. It was very good. Thank you. It cleared my head as to what steps I'm going to make.
Oh, that's great. And thanks so much for calling, and take care of yourself and enjoy the weekend.
Thank you very much.
You bet. That was Charlie in La Paz, Mexico. What a great part of the world there, folks. If you haven't been down into that area, that part of Mexico, you ought to go ahead and take a trip and go all the way down to Cabo. There's some great golf down there. Obviously, good resorts and hotels, and a couple of good bars that you can hang out in as well. Dow's up 52, S&P's up 5, Composite's up 5 points right now. Russell's up a point. Now let's go see what the message of the markets is. We haven't seen much of a pullback on that, that 30-minute chart that we're taking a look at. The ES, didn't even get down to 2002 just yet. But we've got time in the trading session. But nonetheless, I think you and I have exhausted the 30-minute, the intraday time frames out here. We took a quick peek at the Euro-Japanese yen as you and I discussed. With that currency pair moving like it is to the north and with a wide-ranging bar, very difficult for sellers to really line up here today because they're just going to get pummeled because it's the currency pair. I know Larry shares a chart every now and then that shows the value of the trading that goes on inside the currency market versus the stock market. And if you're going to try to measure it, it's a blip in the stock market, and it is huge in the currency market. So you don't have to trade currencies, but in your trading and investing, especially if you're a trader, you really should make sure that you have access to the currency pairs so that you can see what's going on there. Now, let's go take a look at, I'm going to switch over and take a look at some other longer-term charts with you. So give me a moment to do that. Let me change over to this workspace here. And what we're going to do is we're going to step back now. We're going to go from these intraday charts. We're going to go to the longer-term time frames out here. And we're going to start, let's start here with the New York Stock Exchange, right? Because it's a wider swath of the market. It provides you and I with really important messages. Now, if you're watching this on Tiger TV, you're looking at one of the charts that's posted in my my expanded edition of the daily newsletter. Obviously, if I said each day, boy, that's repeating myself. But what we're looking at here is the long term. This takes us back in the 1995 time frame. Now, what I also want you to understand is whenever you enter a trade, doesn't matter what time frame it is, whenever you enter a trade, just like Charlie and I did, we take a look at where is natural levels of resistance and support out there. That way we can plan our trade out. So we take whatever information that we have available to us. When a top forms, that means, and we don't have to be going short, but when a top forms, what you then want to understand is where is the first level of support. Now, inside of the New York Stock Exchange, this is a monthly chart we're looking at. The first level of support is always its trend line, or it's not always, but it's what I would look at is its trend line. It's longer-term trend line. If you did that back in the, let me get my cursor out here. If you did that back in the 2000 time frame, all right, you wouldn't have sold the last tick or anything like that, the top tick. You don't really need to sell the top tick or buy the bottom tick in order to be able to make money out here. But when that trend line was broken, which inside the New York Stock Exchange was back in February of 2001, and had some follow through on that very next month. That signal by breaking that price had pulled back to that area. When the price broke through that trend line, that spelled curtains for the markets. Made about 4 or 5 different waves to the downside. You can see at the bottom here, little price relative strength divergence pattern, the one we looked at on a 30-minute chart, then on a 2-hour chart. Take a look at the top as it was forming back in 2000. Out here inside of the NASDAQ. Same pattern, by the way, out here at 2007, back in October of 2007. Now, I mentioned to Larry, just pinging back and forth inside the Tiger's Den, the low that was made last Friday, I consider that low to be the same significance to this low right here in August of 2007. Now, this is a monthly chart. Now, in August of 2007, if memory serves me correct, there were a number of different planetary aspects that had occurred that each time those had formed, they always had marked a bottom. Always had marked. But now, when I say always, I'm just going to go back 200 years. I can't really go back. I'm not much older than that, so I can't go back more than 200 years. But those planetary aspects, when they occurred, had always marked a bottom. And when that low was taken out, that was saying, okay, game on to the south. Now, but you don't need to know that. You don't even have to believe in that stuff. All you have to believe in is that the trend is your friend. And if the trend is your friend and you came off of the low back here in 2003 all the way up to the trend line, and we just use as our next touch points, which, by the way, it also happened to touch that August 2007 low and held and then moved higher. Once we saw a break of that level, price come back and test it, the opposite of what you and I just looked at in gold, and then it went down all the way into March of 2009. You already know that. Fast forward to where we're at today. Fast forward to September. Coming out the March 2009 low, next as our next touch point, which here is October in 2011, which, by the way, was also a Zweig breadth thrust indicator signal in October of 2011. So that's a really good trend line bottom, because that's a major bottoming signal out here. We got one of those yesterday. And what that says is that the low of this week, last week, the low of last week, forget about the low of the week before, that August 24th, or the August candle that we're looking at. I'm not so worried about that. But the low of last week inside of the New York Stock Exchange, which, by the way, is 95.65 and a quarter out there, that's the low. That's the important low. But we have this nice little top out here, right? Price relative strength divergent top out here. They've always marked every significant top inside of the market out here. Always. Go back as far as you want. They have always marked a top. They usually mark a bottom. It doesn't always be on that's on the monthly chart as well. But at the tops, boy, if you're looking for a signature that's consistent, that is it. Price came back to where? It came right back to the trend line. Folks, the trend is your friend out here. And at this stage of the game, what the New York Stock Exchange is trying to do is get it back above its 2007 high. So the key number to be watching today, tomorrow, next week, whenever it is, can't be tomorrow because tomorrow's game day. So we play a different game. We watch a different game out there, right? We watch all the college football and hockey. That's on as well. 10,387.17 is the key number for the New York Stock Exchange. But price came back to support, and it found support. And guess what? It came back and it found support, and that low in August of 2007, the significance of the low of last week out here, and I'll go show you the Zweig bottom thrust indicator out here, major bottom signal. That's the message of the market. I'm just communicating to you what the market is communicating to us. Steve Rhodes with TFNN. We'll be right back.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. I had an email question that said, what's the earliest point in time when I think any kind of significant top could actually form inside of the market? I would say what I would use as my guideline is I'd go ahead and use the volatility index as one of our clues out there. I'd use the patterns that I shared with you earlier during the show, but I'd also take a look at the VIX index. Now, the VIX index is going to pull back to about the 1482 mark. 1482, that's also when we saw the capture of Berwick, I believe. That's when the English and the Scottish during the Anglo-Saxon wars out there, or Anglo-Scottish wars out there in 1482. And 1482 is the number that you want to be watching for inside the VIX. It's at 1711 right now. It's below its 50-day exponential moving average as well. That too is shows us that there's plenty of liquidity inside of the markets. Now, talk about plenty of liquidity. We're going to go ahead and take a look at this wonderful indicator out here, produced or created by Marty Zweig. And he must have been celebrating yesterday upstairs. He created this indicator that so far calls major market bottoms. And these bottoms have never been taken out. Now, the truth is, if you go back over the last 20 years out here, the indicator's only fired away 4 or 5 times. But each time it's fired away, it has formed a major market bottom signal. That's why I say it is, and they've never failed. So I'll go back to that same thing that never failed for 200 years in August of 2007. That was an important low. The number you want to have on your pad of paper, it's not really it is going to be last week's low inside of the New York Stock Exchange. If that low gets taken out, hey, those trend lines that we took a look at, those will have broken. Something that is a major bottom signal will have given away, and then it spells curtains for months to come. But at this stage of the game, you have a major bottom signal, and that says buy all the dips you can out there. But until that changes, and if that does change, well, I'll let you know about it. Because to me, it's just about communicating to you the message of the markets. So stay tuned, folks. Tom O'Brien, I believe he'll be up with his market update. And then we've got the Nadex Bull Bear Binary Option Hour. I'll be back with you from 1 to 2. Hey, check out my newsletter service, Mastering Probability. You'll be glad that you did. Have a great weekend, a great day. Look forward to seeing you again soon. Take care, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.